Okay, so do you think that it's time? So for viewers out there who might be holding on to memory or semiconductor trades and they're really questioning, what do I do with this? Or do I have to sell here and look elsewhere? Do you recommend getting into Mag 7s and financials on the points that you were making just right now?
Yeah, it's a great question, and it's really individualized on how an investor is currently positioned. I would say for an investor who has had the Mag 7 or exposure to the major broad indexes and have ridden the momentum over the last several years and already have a significant Mag 7 exposure, I don't necessarily think they need to add to that position. I would suggest, though, that they take a look at really the exposure they have in the memory and chip trade and ask themselves, is that exposure, am I comfortable owning that exposure for several years? Or am I comfortable facing the fact that we may have significant drawdowns in the short term? And can I ride that wave of momentum as these names face the different sentiment challenges that we're dealing with, especially with the geopolitical issues that we've been facing?
Hey, Alex, how investable, in your opinion, is Apple at these levels after this move to new highs?
Yeah, I think from a perspective of Apple, you're really looking at what their strategy is over the long term, right? So Apple has kind of sat back, and rather than trying to chase the capital expenditures of AI, they've sat back and seeing who's going to be the winners and perhaps the utility players in that AI story. I think from an Apple perspective, you're really trying to get an understanding of what their strategy has been. And I think over the last several months, investors were really struggling with what is the long-term strategy of Apple over time. And now that we're at the point where you have the big AI companies having already made huge investments, Apple now has an opportunity to cement itself in that positioning where they can find themselves picking the winner in AI that they may want to partner with, or potentially acquiring different companies that would allow them the opportunity to take advantage of the gains that we've already made in the AI space.
Can I pivot back to the banks? And Alex, what's your top pick? Because consensus seems to favor JPM. Did Q2 earnings serve to confirm that view, or are Goldman or even Citi emerging as best of breed?
I think the biggest thing with the banks is you don't actually have to pick an individual winner in that space. I think there's plenty of opportunity for a rising tide to lift all ships in that space. Each of these individual banks have their own idiosyncrasies, but I think the biggest thing that's driving recent returns in the banks is, like you mentioned earlier in the show, where you have major gains in the equity side of their business. You've had some IPOs of some obviously major names that have come on the board. I think the core piece, though, for the banks is ultimately they're in an environment where we're in that sweet spot with the 10-year treasury over 4%. And that's an opportunity for them to continue to live in that zone where the concerns where maybe we may have a rate hike have gone away. And the economic stability of the U.S. and the strength of the consumer is really cementing the fact that the rates can stay where they are at this point. And I think it's just a really favorable opportunity for banks generally to live.
Alex, let's assess the balance of risks. And do you feel that this conflict in the Middle East has now entered an altogether new dangerous phase? And is a return to $100 a barrel oil, possibly higher, back on the table?
Yeah, I mean, the Iran conflict is certainly a major test for the market's momentum. Investors find themselves in this push-pull where corporate earnings continue to look really strong. We've had that sweet spot where there's still momentum around the AI trade. And it looked for a period of time there where the Iran conflict was coming to some sort of a resolution. And I think investors now are trying to grapple with, if this conflict goes on far longer than expected, can we live with that? And if not, maybe I perhaps should take some chips off the table and reassess my positioning. I think at the end of the day, investors are ultimately finding themselves in a position where, can I live with the geopolitical risks as they are? And really, we expect Congress to push Walsh to give a really clear roadmap over time, which he's done over the last few days. The economic stability is incredibly fragile right now. And that's the biggest point for investors to grapple with.
Do you expect some sort of a consolidation for the U.S. market sometime this year? And if that happens, do international markets give you some buffer? I mean, you point out how you like markets like India, Japan, and Europe. Sure, they have been some of the favorite diversification calls out there. But if you really zoom out, the U.S. has been really exceptional. Do you think it would actually work this time around in terms of international market exposure?
Yeah, I think you've started to see a bit of that mini rotation over the last year and a half into international markers when it comes to where investors are positioning. And I think if you want value, you just have a real significant opportunity to look overseas. I mean, as you mentioned, for years, the U.S. market has driven the bulk of global returns, and that's pushed up U.S. stock prices really to a premium. And international markets have been left behind in terms of the overall returns that you've seen globally over the last decade plus. But that's also created an incredible opportunity where you can buy just really high-class global companies overseas without having to pay a premium that you have been paying for the U.S. And I think that's also a great hedge during periods of high geopolitical uncertainty, where you're able to have a bit of margin of safety on the price you're buying as a starting point.
Alex, we've got 1 minute left. Is the FOMC this month still a live meeting, a live event? And what's your best bet on the outcome?
I think at the end of the day, the Federal Reserve finds themselves in the position where they have the ability to follow where the data is going. And in Warsh's new positioning now of not giving that forward guidance, I think we're in that position where rates are going to stay where they're currently at. I mean, we started the year with expectations of multiple rate cuts as a market environment. We entered then a phase where people were expecting a very high likelihood of a hike. I think in this environment, especially with midterm elections going on, geopolitical uncertainty, questions around where inflation really should be in light of the movements around oil, I think it's really the likeliest outcome is that we're going to stay in the same environment we find ourselves in today.